Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I get a screen and audio check in YouTube and the Bookmap Discord TraderLab chat? Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I get a screen and audio? Great, everyone. Well, thank you for visiting the Trader Lab on this pre-Memorial Day weekend. Shout out for all the veterans and also to remember all of those who've given so much for our freedom here in the U.S. and, of course, globally. Welcome, everyone, to the Trader Lab. I'm your host, Tom B. This stream is about integrating Bookmap Order Flow tools with auction market theory using a tool called the volume profile in the intraday developing time frame. And this stream is based on structured trades that are available to everyone in the Bookmap Discord TraderLab chat, as well as a library of webinars and a community, a terrific community of like-minded traders looking to build out the business side of trading with the objective of creating careers in the business. That is the purpose of the TraderLab, and I appreciate you all stopping by to visit today. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. One moment, please, guys. I got to grab a link over here. Maybe, if I can find it. Okay. I've got something I want to show you guys. Actually, I want to post a link in YouTube. Or, Stephen, maybe you could do that for me. If you scroll back in the chat, wow, to somewhere this morning. Yeah, it is yesterday's stream. Actually, I think I can get it, Stephen. Then I'll move on, right on, guys. I'm going to put this in the YouTube chat. What it is yesterday's stream recording. It talks about setups, strategies, trade management in a extreme market conditions. And I'm making that available publicly. Typically, I don't do this. And this is so you guys have an opportunity this weekend to reverse engineer and take a look at this. If you're just visiting in YouTube for the first time, take your time this weekend, hang out with this, and look back at yesterday. The thing about TraderLab, so you understand, is the goal of TraderLab is to create structured business plans that are metrics driven or vetted. In other words, a statistical edge. The business of trading is to have this plan and know where you're going to interact with the market. That's what the TraderLab is about. Now, here's the other part of this. The market varies every day. In other words, today is not yesterday, right? But imagine if the plan would fit almost every day. So what changes in our plan? The range, not the processes. Now, obviously, the market's different and it transitions and it does all kinds of things, just to make you crazy. But the thing is, if you have defined the conditions, then the variable's the range. And I want to make a point of that because TraderLab participants, many of them had exceptional days yesterday. And of course, like all developing traders, if you don't have experience in managing your emotions or any of the other variables that get us, if you know what I mean, then it's just one of those days and you have winners, losers, and you have to go back, in my opinion, and deconstruct the day and see what you did. Did you overtrade? Were you trapped by FOMO? Did you lose your way? And this happens to all of us. So nobody's immune. What we try to do is push back against the emotional state that will scramble our brain. And you may think it's easy. It is not. The comparison really is how casinos operate. See, the casinos are not emotionally attached to the outcome of any interaction with the gamblers. We are attached, and that's the difference. We get chemicals released in our brain because of our fear and our attachment. The casinos don't do that. Think of the business we're in as gaming, not predicting, very important, and then it's statistical probabilities. Casinos only play games that have a statistical edge. They play them exactly the same way. They're in a random environment like we are. Make the connection. If you can connect to a successful business model like gaming, then let's accept we are in the gaming business and not try to make it something else. If we can accept we're in a gaming business where we don't control the outcome of the next game, or structured trade, if you will, which is a game, if you will, in alignment with the gaming business. Now your job is not to be attached to the outcome. The casinos see the outcome as overhead and cost of production. It's the path to get the extraction of their edge from the gamblers. Can you make that adjustment? Can you discipline yourself to have faith in the process, not let your emotions dictate your behavior? This, of all the things, I believe, is the greatest obstacle that we face as traders. Now, I'm going to show you something. Hopefully things don't blow up here. And then I'm going to give you some statistics. Grab your pen and piece of paper. And please remember, this is not a trade calling room. This is for educational purposes only and is based on structured trades that are available to everyone in the Bookmap Discord TraderLab chat. Now, this is actually the TraderLab chat, and you're all welcome to it. Well, that didn't do too much. Oh, let me try this. Let me not try this. Hold on, guys. Hopefully, I'm not going to blow the whole thing up here. If I do, forgive me. Really making progress. Can you guys see this chart okay? Hold on here. Let's get back here. Okay, great. All right. Hi, John. How are you? Okay. This is yesterday's sell-off. Now, what this is, and I normally don't have time for this, but I thought it was kind of important, of course. Now, let's focus. This is a breakaway gap, and this is the consolidation. Write these numbers down. Now, hold on. Let me go back here. This is where the gap was between this and this low and here. We filled the gap yesterday. Write this number down, 5269. This is called a naked volume point of control. And I can't remember yesterday. It's all a blur to me. But I think I might have mentioned, and I don't know if I mentioned it in the stream. I certainly do discuss all of these things in the Bookmap Discord TraderLab chat, for our trading team, if you will. And it is a team because we're all on the same team. 5269. Why is this important? In this day here, most of the volume, remember, this is about volume profile and auction market theory. Now, the term theory probably we're thinking about here auction market theory of relativity, and it's all esoteric. It's not. It's very simple. It's shopping. If the highest volume took place at the high of this day, that suggests that the buyers and sellers interacted mostly up here, not at the bottom, but up at the top. That says that's a retail price. Remember, you go to the store, you shop. High volume is where everybody is willing to do business. But what happens if this price becomes too low? You can't buy an S&P down here anymore. The market gaps and runs away, okay? And then there's new valuation of the S&P, okay? And then the market consolidates. And how does the market work? Write this down. The market goes up to go down. In other words, longs, sell stops under them. Continuation, buyers, sell stops. Then the market goes down, shorts. into the sell stops that are from these longs. The market is now short. The market goes down, you get sellers. We go down, get more sellers. Buy stops above. What do? Into the buy stops. And what about these sellers? Into the buy stops. Market comes up. We now have longs in the market. What does it do? Comes down on the longs. You see what I'm saying? Market goes up, squeeze out. Market comes down, finds its buyers, squeeze out the sellers in the morning. That was the day before yesterday. Market gaps in the ETH, squeezes out the shorts, and there's more buyers, and you have all the stops under here, and you have the stops in the gap. The ultimate flush of the financial, you know what? We fill the gap. Now, I'm going to give you a couple numbers. And the reason I'm taking my time with this is called context. This is auction market theory. This is the higher time frame. And it's really important to understand what's going on. Not what will go on, what might go on, and where it might happen. Nobody can predict anything. I certainly didn't know this was happening. Yesterday morning, I figured with the gap, we might come back and then rip, because I'm looking for a blow off top. But what the market typically does, and we don't know when, this is the joy. I would say it's the joy because it's the mystery of the market. It's the randomness. It takes these longs out. And now what? The market is short. The fuel's to the upside. Where are we today? We're coming back here. 33.50 is the target. It's not a recommendation, but this is on the map from before this day. This is where most of the volume is in this consolidation. So we blew out all the longs, and now the potential is back here. And we'll see if it does it. 33.50 is the target. And don't forget, it's a holiday weekend. And by the way, here's the other concept. If we did the Acapulco cliff dive yesterday, the market is short. What might happen in front of a long weekend? How about short covering? You guys with me? Now, let's do another thing. Write this down. 52.69. That's the retail price from this day. This was the gap. We filled it like to the tick pretty much. And this is the important thing. 33.50. Okay? Thanks for your patience with that. And I can't see your questions because I'm on a different computer completely, as they say, and hopefully I don't cause a problem here. Let me see if I can get the Discord chat out of here and not blow things up. Hold on, guys. I'm moving things around. This is actually a laptop. Hold on. Can't see what's going on. Okay. A little bit more. All right, gotcha. All right. Now, let me get back to what I'm doing, switching computers. You'd be surprised. This is like a, I don't want to say it's, remember Cape Canaveral? Okay. Now, grab your pen and paper. I'm going to give you statistics, and then we're going to rip through what we got going on here. Okay, so now, next piece. Once you have that higher time frame, and let's go back, just so you see, they're sitting up here on the chart, wherever they are, here. That's that 33.50. Okay, the target I just showed you. Now, write these. Here's some more. We're opening higher inside of yesterday's range. Okay. Now, you're going to find maybe this is interesting. I hope. Write this down. Overnight volume point of control. Remember, I talk about retail price. There's an 82% probability that we're going to touch it. Now, obviously, there's a 80, let me try to, well, hitting the previous higher low is kind of a reach. I'm not going to get into that one. I mean, it can happen, but that's not immediately, because this is our target. Now, we'd have to go all the way, we'd really have to reach to the north side or the south side to get to the previous higher low. Let's skip that one. So, overnight mid, 72% probability. It's important. Why is it important? Because this is a business of gaming statistics. And of course, you have to vet these for yourself. And here's the other piece. There's no precision in this business. It's all kind of like, maybe. It's areas of behavior, not walls. So this is a target on the downside, and it's a 68% probability we get here during the RTH session. Now, the joy of all this is we don't know how, if, or when. So, put that in the mix. There is a 67% probability we take out the first hour's high, which is called the IB high, this. And this is all before the market opens. And here's something. The overnight low has a 49% probability. Now, I'm really going to, I think, light your fire, as they say. Where's the ETH low? Do you remember the target that I talked about that was on the low side? It is 50, well, I'm losing it again here. 52, hold on. Guys, this is the right level. TraderLab, help me out here. I got too many screens running and too many different workstations. Is that this naked volume point of control? Isn't this our 86? Is that correct? Can you confirm that? $86 quarter. Thank you. So, guys, this is the last retail price. Think of this as shopping, is too low. It was a target coming down, I think, from yesterday. Are my levels covered up here? I'm in a state of, they say, confusion. Hold on. No, that's correct. Okay. So this is the 69, okay? And this is yesterday's naked volume point of control. Okay, highest volume yesterday. Sorry about that. Yesterday's low filled the gap. Okay, this was a level below if we got under the gap, and this was yesterday's high volume. Okay, got my brain scrambled. So in the ETH, we checked the high volume from yesterday. Too low. Isn't this interesting? So in the ETH, this is too low. This is like a shopping experience, auction market theory. Oh, it's on sale. Come down. What do we think of this? Wow, we're inside of this. We're over yesterday's low. This is where the high volume was yesterday. It looked like the end of the planet, right? But now it's too low. What does the market do? It reverses from it. So this sets up the potential, and that's all you got in this thing, for longs. So now, sorry for the long thing, but if you don't, this is what we do in TraderLab. Because before the day starts, you got to have a plan, or you just, as they say, winging it. Not so good in the gaming business. Casinos don't make up the games. What they do is they play the games that have an edge. Here's the other piece. Yesterday's settlement. Overnight low. Retail price. You see the confluence? Okay, guys. I can't see your questions. I'm going to try to catch up, okay? Okay, guys. So, any questions? Everybody, this is the lay of the land. This is trade preparation. All these levels are on the chart. They are generated by the market. I'm not making them up. How can I do that? I don't know. What creates these levels? Participant behavior. And it's not based on your oscillator, your moving average, nada. This is based on volume and the auction. Because the ultimate truth, and again, it's just an opinion, is that what creates the movement in the market? It's the participants. It's not your indicator. Your indicator is just there, and it doesn't define the market. Many traders in the retail space think this is a business of indicators and timeframes. I'm going to assure you, again, just based on my experience, which is doing the same things you did, except I did it a long time ago, That doesn't work. Didn't work for me. If it works for you, come to TraderLab, contribute. You know, I'm sure we can help you. Maybe you'll help us. I'm sure you will. Bring your experience. It's worth a lot. The thing about experience and the fallacy of indicators, and I'm just going to mention this, it's not a criticism. What it is you need to know where the indicator applies, but it is not what defines the market. The indicator follows parameters that are price-based or derivative of price, which is all wonderful, right? Except they're backwards looking and they have no clue what happened yesterday and no clue as far as what happened in the auction, which was checking the settlement, checking the high volume price, which is too low based on the auction principle, and the ETH low at the same location. Your indicator, what's it going to tell you about that? How does that help you define what you're going to do today? Just a question. So anyway, this is now you saw what we did in the ETH. We checked yesterday's high volume price for the RTH yesterday. It was too low. So that we know we got maybe, and it's always maybe, too low. Now, this is the ETH overnight volume point of control. This is now the new retail price of the last auction. So what this tells me here is not only did we check the settle and the highest volume price from yesterday's RTH, and it's too low at the moment. Now, this is the new retail price that traders are willing to do business at in the most recent auction. So now this is the fair price. So the way the market tends to operate, and this is what an auction is. It goes up to find what's too high. It goes down to find what's too low. It's called rotations. You know what a rotation is. And the other piece of this is that your store, and once you get this, you'll understand how the market works. You will. Now, the thing that, of course, is the market changes. So it's not black and white or red light, green light like your indicators. It's not, it doesn't work that way, but it does rotate. And this happens in all time frames or fractals. I don't use time in what I do because the participants are what determine the value of something, not the clock. So a 5-minute this or a 10-minute, or I use a 15-minute. Hey, whatever floats your boat, as they say. I don't use any of that. I use behavior. It's a bit different, but it's only because the market is made up of the participants and it's not defined by the clock, other than the obvious thing, news events, and that's still participant behavior, and other factors. Boy, we have some more trades setting up here. We got to get going. So retail, too high, too low. So now let's get into the open. So if we open above, this is the RTH open. Is this too high? Well, there's shorts. Remember, the market goes up to go down and goes down to go up. There's shorts in the market. Holiday weekend. What does the market tend to do, by the way, ahead of holidays? I've posted this in the TraderLab. It tends to celebrate. They're already grilling, and you can see it because the market likes to go up in front of holidays in the U.S. It's something I've observed for many, many, many years. And it's always been, why would it do that? Why? Time to party. I don't know. Open, retail, and what's our statistics? Let's come back. There's another one in here. ETH high has a high probability of getting taken out. So here, and then whatever. And then back to here. So if this opens here, this overnight high, let me just see if I got this, has a 69% probability. Now, here's the thing. The statistics I am giving are related only to the open in relation to yesterday's RTH. They have nothing to do with the context that I shared with you at the top of the stream. So this is a high probability. Now, if this open was down here someplace, it would be the same probability. So I just want you to know. So the open's here, this is here, and it's like, oh, great, But I know there's a high probability. I also know this has a high probability. I also know that if the market opens higher like this, it is possible for it to mean revert. Come back here. So let's watch. I know, this makes you crazy. Trust me on this. We're all crazy. So RTH open. overnight high, ETH high, statistic, drop, overnight volume point of control. You see it? So let's watch here. Let's now get into the open. Let's talk about first trades. And the open is the last place I think you want to trade, unless you have an edge and you've actually worked out an opening trade. In the TraderLab, there's 60 PDFs, and I don't remember, actually, I haven't looked at them in a long time, but the opening trade is structural and a high-risk trade. And the reason is you can get the head fake. The market could open, give you a little of this, take out the opening swing high, and then do whatever it might do. So this is part of the joy. So let's take a look at the first trade. Now, for me, I'm bullish. I want to be long. This is where I want to be. But I have to get long somewhere. What do I know? I know this is a high probability, but look, bang, right on the open. Pong. Uh-oh. So what am I going to do? Well, now what? And now I'm looking for behavior. Am I just going to take off and go to my 33.5, which is my target? Or am I going to come and check this first? Retail. Remember what we did in the ETH? We checked yesterday's retail price. And the question you need to ask yourself, and I ask myself, is this too low? I know the one below is too low, and I know we're above it. What about this? You say. So I'm sitting here going, now I'm going to take into microstructure. Now, these are not trade recommendations, but I always do this because I want you to understand how the market works. And I don't use any indicators. I mean, there is a couple things in here that Bookmap provides that I think could be useful at times. But the thing about an indicator is that they have a place. It's that most retail traders define trading by indicators, not by behavior, and they don't know how to use an indicator. It isn't just because it crosses over, you do something. It's does it align with what's going on? And it's not what's defining what goes on. That's where retail traders. And here's the other thing about indicators, and the reason I kind of always bring this up. Why do most retail traders not succeed? Well, there's many, many different reasons. One of them that's a key is that retail traders think that it's an indicator-based business, and all they got to do is get the right mix of indicators and time frames, and now they have an ATM in the basement. And I'm going to suggest it's not the way it is. So let's mark this. I call this a variable high volume node. What I track at the open and beyond is the migration of this yellow line. It's called the volume point of control, and it moves. So it's a variable, and it's high volume. So I call them a variable high volume node. And when I first started doing this, I have to tell you, it was very mysterious to me because I was going, why? I mean, I understand why this is moving, but what does it represent? That's what's the important thing. So here we have the volume point of control. This is my early warning system. Now, right here, the market is open, not even 2 seconds. This is why you don't trade this, unless you got a lot of screen time and you can understand what's happening. This is language. Now, remember, have you guys ever tried to learn a language or play a musical instrument? How do you do it in real time? It's unconscious competence. In other words, there's no break in the consciousness, if you will, or the read, I should say. It just comes. And that's because now it's unconscious. When you're developing this, you are, first of all, you're incompetent, believe me. Then you can come, after you do the work, consciously competent, but you're still doing it like if you translate a language in your head, it isn't just like you're speaking it fluidly. There's a step in between. Then with a lot of practice, it just starts coming. Does that make sense? That's learning. Are you guys tracking? Dan, I don't know if you're still in the stream. The Discord chat is getting overwhelmed by participants for some reason. I didn't think it had any kind of capacity issue, but I think we're overloading it with participants in the TraderLab, so we got to fix that. So let's look. RTH open. There's a buyer. Now I'm going to take you to microstructure. Now let's go back to context. What are we looking for? 33.50. Now it's a level. It's not the end. You know what it is. It is. We trade towards levels. We don't know. This is right here is the variable high volume node. I have buyers right here. I have hit my first target, and of course I can't do anything with that. But what might you get? You might get some selling here, but let's say we don't know. How about this? I have no clue. My claim to fame, if somebody says what's going to happen, I'm going to say I'm clueless. Now it's not completely true, but what it is that I'm not ignorant. What I am is open. In other words, I stay completely fluid because the market changes and I'm a day trader. So if I think the market's going up, why might I get short? You're going to go, really? Well, here's the choices you have. If you're subject to your plan, and this is really what this is all about, plan specific, you could be taking shorts to targets, or you could be skipping the shorts and taking longs in alignment with your higher time frame plan, which is up to 33. So for me, I took a short. Doesn't matter what I did. Or you don't take a short and you're scoping out. You see the short, you hands off, let the short play out to get long. Does that make sense? You could do it either way. By the way, thumb up in YouTube if you're finding this interesting. I want to get into the trades though. The structured trades. Now, everything has to be vetted. What I do is not what you should do. You should find what works for you that has an edge, and then you isolate it, analyze it, document it. You build a trade book. Do you have a trade book? Where's my trade? Well, it's called, there's two, remember, it could open, never look back. But this is the retail price. If you go to the store and it's overpriced, maybe, it may come back to retail. You ever do that? What did they do? They raised the price? Well, if they want to sell S&Ps, they got to lower the price to retail. So that means if this is my target up here, which is that overnight thing, now I'm going to take you into minutia. Now I'm going to go to microstructure. So right here, going to the moon, Alice, developing volume point of control. And buyers look, just watch. Going up. Right here, I see a seller. Here's my volume. This is a very tricky place to trade, and I always want to emphasize, don't trade here, but learn from it. If we're going higher, because this moved up, we're going to push off it. So I'm looking for a long here. Okay, right here. What do I get? Buyer, retail, break. See how subtle this is? And the volume point of control moves down. I'm in minutia. This will make you nutty, but I want to show you what you can do with Bookmap. So right here, now this is only a second, you say so. But I know right here, maybe we're going to go down unless we come above it. This now becomes resistance. And I'm talking, when I say microstructure, I'm saying electron microscope. Sellers are here. This now is too high unless we cross above, right? Look what we did here. We crossed below. There's the VWAP in the mid. I didn't get back above here. So these guys, these buyers, and this guy are on the hook. My sellers come in. I see liquidity in the book. Let's watch it. Come back and test. I have a seller here. I take a short here. Now, this is very aggressive. My stop is here. So this is my first trade. And why would I go short? Because I want to get long here. This is my long. So, and look at the liquidity. You see it? stop here, liquidity. So the short is here or here. And when the liquidity jumps in the book, it's also a short. Are you guys tracking? First sell, and it's not part of most traders' trade plans. It's not why I'm showing it to you. I'm showing it to you so you could read the market. Is this making some sense? How are we doing in YouTube? Hope you haven't passed out. Please give a thumb up if you're finding this interesting. Well, guys, if you want a larger stream slot, I'm just seeing that's posted. You could always email Bruce or somebody, or I mean, it's up to Bookmap. There's a lot of other streamers and a lot of education. So I, certainly don't want to hog the thing. Too high, selling, no buying above here, and these guys are on the hook. So these guys are stuck. My next location is here, retail. So right here, this is where I wanted to get long. Let me give you the choices. You see the seller, you don't get short. It's a short you don't take. It says, Lewis, wait. Where's my location that's on my trade plan? And statistically, it has an 82% probability. Past performance not indicative of future results. You got to vet the stats. And remember, the market's random. It could care less. There's my seller. This is my location. So my short, my target was to here, and there's more. And I have another target, this, the overnight mid, which just got covered up. It was right there. So I have this and this. So I'm going for this and for that. Just so you know, and this is my next area. So here I see my buyer. So here's my seller, going down, going to zero, having a good time. Right here, let's look. So down, 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 down. Liquidity in the book, pressure, pressure, pressure. Oh, seller going to zero, going down to my next target, which is here. And I see a buyer and I see it absorbed. So I have another seller here absorbing this buyer. Now, this is very interesting. Watch. And a seller here. So I'm going, boom. Not so much. But I want to get long here too. So I'm perplexed. And the perplexion is it's a location to get long and it's a location to break and go to the next target. That's all I know. So I see, and right here I'm saying, and I see the opposite behavior. So I cover my short and I take a long. And I'm going back for this, the watch. So now I come to mid. Now right here, so I'm here and I'm going, well, now what? So trade is on from here. This drops down. This is a problem for me. I got to label this. This is called the variable high volume node. Follow the yellow brick road. Follow the yellow brick road. Whoop, get over here. So that's too high. So the possibility is the following. This is the possibility. Here to here to here, or here to there, and then down to my other target. So I'm perplexed. So the long is here. So the short to here, and then looking for maybe this. But it could go either way right from here. So let's watch it. Next target was here. You see it? I can't make this stuff up. Are you guys tracking? TA, hi. There's tremendous amount of education at bookmap.com on how to use a high tier tool like this. You could get it. There's a knowledge base. There's tons of information. You can click the link in the bottom of YouTube if you want to get more information on Bookmap and how, all kinds of educational videos on there. You can spend a lot of time getting into the nuance and educating yourself on how order flow works and how you can integrate it. So this is my next target. So the long scale, you notice you get mechanical sellers at the mid. This is retail trader behavior. Follow the yellow brick road. I don't do that. I mean, I do when it fits. But what do I know? 3350 is my target. This is my next target here. So it was here to here to here, and then watch. Now, we fall back. Now, this is even better. I can't help myself. I love what I do, and I love the market. I'm going on 45 years of doing this trading, and I will tell you many of those years were miserable because I was just like you. I was trying to fix something that was defective from a process angle, and I thought my persistence would solve it. What the problem was, which I didn't understand because I didn't understand early on that this is a gaming business, not a prediction business. So I was upside down. My brain was out the window. So right here, remember, overnight volume point of control, right? Break down right here. Check, right? Watch the book. So right here, I should say, variable high volume node. This is where we took off and it was too low. But I have another location down here. Overnight volume point of control. It's the same trade as this. Same trade. So what do? We tag it to the tick. I can't make it up because, who knows? Now, when I see this, I'm looking at it again to fall out, to go to the overnight mid, okay? So what I get is the following. So, but here's what's important. I'm at a location. Now I'm under this. So this is concerning to me. I got my sellers here. I see a buyer. Now right here, who's going to win? These guys or the buyers? Well, this is the retail price. Too low, buyer, buyer. I take a long here, and I'm back on the long side again. This comes into the book. Gives me a little bit of relief. Buyers are here. This is stuck. Sellers try here, try here. This comes into the book. It's like the wind at your back. They're stuck. Now, where am I trying to go? Across. Pull back to the mid. Another opportunity. Now, I trade volume levels primarily because of what they represent, but I target the mid and the VWAP, and under certain conditions, I use them if they align because they're part of my trade plan. Let's watch. VPOC migration. Now, up here, we come back to the overnight high. Let's take a look. Now, remember, there's a couple possibilities here. We have statistics. We're going for 33 and change on the upside, and we have maybe this is the low of the day, right? Overnight volume point of control, too low. But there's one other statistic. Don't forget it. Right down here, the overnight mid, right? And what's that statistic? Now, why am I talking about statistics? Because other traders don't do it. 72% almost 73% probability I'll get to the overnight mid, and remember, an 82% probability I'll get to the overnight volume point of control. Can you see how using statistics might help you develop an edge? And by the way, the market could care less, because like yesterday, it just basically threw everything out the window. As they say, it threw the baby out with the bath water. And then you just have to follow the context and then use your trade plan as you should. So the long, now we're only in 7 minutes. right? Now, this is important here. Remember, too high, too high. Here, VPOC migration. Looking good, Lewis. Going higher. Party. Falls under. Not good. Now, this is resistance. I'm going to mark it. Let's just see what happens here. See if you can track. Now, nothing predicts what's going to happen. A line on a chart, kind of useless in a lot of ways, because the line is just, but the reason I mark these, and they are lines, is because of what they represent. This is high volume. And the market is a shopping experience. You know, that's how I relate to it. And the whole purpose of even having a market is try to figure out what's this thing worth. We don't know. I don't know. Do you know? I don't know. Because it changes. That's what the auction is. It's what's too high? Well, what's too low? Right now, this is too low. Yeah, but this is maybe too high. And we know this might be too high. Now we come across it. Looks like it's going to the moon. What happens here? Buyers are here. Looking good. Sellers come here. We got these guys right here. We need them to get thrown under the bus, and we need a leg up here. Otherwise, these guys have a problem. Now, I'm going to take you to the minutia. I'm going to go into microstructure for you. Now, right here, I don't know, but I want to show you a way to read the market. This is high volume right here, the buyer. The sellers come in here. This might be too high. The buyers try here. Now, right now, it looks like these guys are going to get hosed, and we're going to do this. Instead, I see the seller. I see this liquidity come in the book, and what that suggests to me is this is too high. But I really, it's a maybe over here, but it's at this point a trigger in the TraderLab. So this volume, and you could see it there, that high volume right there is too high. When I come back and check it, it's the following: an exit or a short. And I posted this in TraderLab. It's called mean reversion. See where we come back? We check it. I'm not paying that. Get out of here. So this is a short to here. We come back. If we can't take it out, why? Because the shoppers, this is like going to your store, your little down the street store. I'm not paying that. You want how much for a pint of ice cream tonight for the movie? I'm not paying that. Well, the shoppers come back to the store. Selling icebergs, by the way. And here's the sellers. This guy's out here. Am I the only one paying this much for ice cream tonight? And what does it come back to? Let's look at the structure. This is structured trading. So in a fractal, this is too high. Buyers are trapped here. Let's go over here. See, what I'm trying to say is buyers, too high. Sellers took control. If you think a price of something is too high and you're willing to sell it here, or the buyers get absorbed by this iceberg and there's no more buying, if I come back to that price, look to the right, and it's still too high, and my buyers are trapped again, it's a short. And where to? This is called mean reversion. That's the mean. It comes back here. Then what? Here. But what is this? The current low of the day. I took that. And where are we going? Overnight mid, which is right now right there. So that's my next target. And what was that probability? This is TraderLab trading. I know it's a little bit of work, isn't it? 72%, almost 73% probability, past performance, not indicative future results. Come to TraderLab if you're interested in understanding what this is all about. So, short, target. Now, let's look at the target. What happens at, it's right there, by the way, overnight mid. It's underneath. I want you to know. So this is my target, and I got out here. I always leave a little for the sweeper. And you see the reaction. Now there's a seller here and a stop sweep. And I'm going, watch. Let's watch. Let's now go further. Let's look at the long. Now, when I'm here at the overnight mid, which is right there, remember, no precision. I don't know if it's going down. I don't know what it's going to do, but it's a level I already know. And I know that let's go back. I checked yesterday's high volume price, which is at the ETH low, and in the ETH low was yesterday's settlement. That's what's at the top of the stream. Remember, if you're in TraderLab, you can review this. This is exclusively for TraderLab participants. You'll have all weekend to pull this thing apart, just like the other ones that are exclusively available to TraderLab. But let's look at now the long. Now, remember, this was a long. And how do I get long at these locations? I'm waiting. I'm like a hunter. I'm standing behind a tree. I'm waiting for the little rabbit to go running by. No offense to rabbits, or whatever it is I'm hunting. And I know the locations. I don't know when, if, what, anything. The first short I was on, remember? This was a target, and this down here was a target. What did it do? It came here and reversed, so I got long. Now we come under here. This is the next target. Okay, now what? I got long there. I'm going to be looking to get long here. It's the same process, guys. That's why trading, while random, I believe anybody can learn to trade. Now, not everybody can trade. And there's a lot of reasons. Some are psychological, and others are just many want to play a game, but they're not willing to do the work to create a business. Have you ever built a business? Trust me, this is not something that's going to take you 60 days and you have an ATM in the basement. So the market comes down to the location. No precision. This is trading. I see a buying iceberg. I see the liquidity come into the book. So I'm seeing confluence now with Bookmap. And I still have no clue. I mean, I don't have a clue. I have no clue. I am the clueless. I'm not ignorant. I am clueless. No precision. But here's what I see that's different. I see the iceberg. I see the sellers. I see absorption. This is the absorption detector. This is a warning Will Robinson moment for the shorts. And again, if we could just keep going, you see? So I cannot, quote, predict. If you think this is a business of prediction, you're in the wrong business. Open up a palm reader shop. You'll do better. Sellers, absorption. Iceberg. Sellers. Going to zero, Lewis. Seller. Nothing. Buyers are here. Change. You see the change? All of a sudden, bing. These sellers are now stuck. That delta represents where the volume is that went off. So sellers. Okay. So this is the limit. This is an iceberg limit order. Okay. So they got filled here. There's your absorption. So you got all these pieces. And you got to study this to understand what you're seeing in the order flow. It's not and what makes it material? Overnight mid. Otherwise this is just out in space, you know. So this is the long. Now what, you say? What do you do now? Well, back here. Scale. Watch. And by the way, there was a report too. So if I trade into a report, I have to be risk neutral. I scale to get risk neutral, and then I manage my trade. Or you don't trade. That's the other part. But let's talk about this. Let's assume you're conservative. I'm not saying you shouldn't be, and you don't take this trade. But you know it happened. And now you're above this. And now you come across the bid in the VWAP. Now let's talk about how you might get in if you didn't get long down there. I'm only at 9 a.m. now. Lovely. Break high. Now what you would want to do is buy a rotation, try to find a location to get long. Let's see if we get one. Pull back to the volume point of control. This right here is a variable high volume node. I gotta throw it in here. How are we doing with our 33? See, I hear noise, so I think it's doing something. Variable high volume node. Now these change as the market auctions and the volume shifts around. Remember, the purpose of the market is to try to get a retail price. Okay, now this is the market pulse. It is suggesting we're overbought. Remember, I don't trade from this, but I see it, and that shows me what? Possibility of a rotation. To where? VWAP, mid, and a variable high volume node. Let's just see what it does here. Variable high volume node. Variable high volume node. Mid, VWAP, absorption, iceberg. Let's just see what it does. TraderLab long, TraderLab long, and then you're going for the high, the half-hour high, actually, which is the 9 a.m. high. So this is the 9 a.m. high, right? I think it's here someplace, right at 9. And then we're looking to take that out. So the longs from here, the target is this high to scale. And then you're holding for 33, believe it or not, but that's the target. Now, the thing I do, which is this, the thing I do is I just throw my limit orders out there, and then I manage my trade. In other words, that's out there, and then I'm trailing, with my plan. So let's follow. So now, once we take out this first half-hour high, there's a high probability we're going to take out the first hour high, which is this. And that's set at 9:30. Let me give you the stat. Remember, we're all statistics here. Very boring for you, I know, but this is trading. Very boring business. 68% probability we're going to take this out. So this is the next target right here. So I have my order one tick in front of this. And right here, liquidity comes in. So I have another scale going. You'll love this. Really floated my boat. I didn't get filled. It was like, what? I got taken out. Okay? So the whole thing went down the toilet, and I was annoyed with myself. But that's besides the point. So I go, all right, I'm out. But I want to get long. Where's my location? See this? So let's just remember where this is. Now I'm going to scroll. Absorption. Location. Put it back on. Going for this scaled. I said, I got you now. Now, I got taken out of this right here. Not right here, but I trail. I'm not one of those brave ones. I just go, and then I'll put the trade back on again. That's my style, because I'm, believe it or not, risk adverse, and psychologically, if I, have a 20 points in a trade and I give back 20 points, you better, lock me in a room somewhere, and, because emotionally it messes with my head. Because now I'm going to be hung up reflecting on my emotions and not on my business, which is take the next trade. So I prefer to take the risk of getting out of the trade. Now, don't forget what my target is. It's this, you know? So what do I know? I don't know. Because remember, what is my term? I'm clueless. I know you're agreeing with me. Aren't we all? You know, remember, what is clueless? I can't predict. Buyers are here. I see a seller. This is absorption. Okay. Remember what happened at the low of the day? I saw it the opposite behavior. So right here, I see absorption and I see the iceberg. I see iceberg selling. I see iceberg selling. So that gets my antenna up. I also see this liquidity come into the order book. All these are pieces. Okay. None of it is predictive because this is like a banana peel. You step on this, you hit your head on the pavement because you don't know what it's going to do. And here's the other piece. You don't know if the market's ever going to get there. We just don't know. So we know we don't know. Write that down. The casinos don't know. How are we supposed to know? So sellers are here. I see sellers. I see my buyer. I'm feeling pretty good. I see a seller. I come up here. I get an iceberg selling. And I'm thinking, this. We're going to, here. I see my seller take over right here. So you know how I am. I'm going, this guy's stuck. And this just might be a little rotation. And now we're going to take these sellers out, right? Nada. So right here, I'm looking at this and I'm saying, okay, these guys are stuck. These guys who sold here are stuck. So this is my support. Buyer here. I need my buyers now to come above these dudes and to clear this. And I'm going for 33. Okay? Just so you know. And this is the trade I was in coming up to the stream. And here, looking for this. No bueno. I get taken out. Trade's over. And that's my last trade, and I haven't seen the rest of this. Oh, even nicer. Look at this. Now, this is too high, right? This is where the sellers took over, right? And you see this, okay? This is like that hand, the invisible hand that smacks you in the back of the head. That's it. Selling icebergs. So, and this takes the longs out, and I'm out of my long. Not because I'm smart, just because I don't know. And now we get this, all right? Now, since I haven't seen this, where's the next place to get long? Well, let me talk about a short. Now, this is subject to trade plan. You may not take this short. You may just be out of your long and say, it's been nice playing. I'm going to go get my pint of ice cream and get ready for the movie tonight. Or if subject to your plan. Now, this is plan specific. You're going to go into a condition called mean reversion. And this is a separate plan. And this is, I think the word I want to use is aggressive because it's now counter trend. I have a target above 33.5. I also see my sellers and I see my liquidity. Now I got liquidity over here too, you see. So I could be done for the day, which maybe I am, to tell you the truth, because by the time I'm done with this, it's time to go warm the grill up. But look where we come. This is structured trading, right? This is where the sellers took over. This is where the last buyers got trapped, right here. The sellers are here. The volume is here. Seller. Now, watch. This right here is where the buyers failed. This is where the sellers took control. They tried. They're now under the bus. Sellers in control here. So this area is too high. That little node sticking out is the volume from this. This is called trading in fractals. And the reason it's important is that overnight volume point of control and all those locations, if you think of fractals, they're like Russian dolls. So they're inside of each other. This is the same, except it's in micro. So that's why I don't use a clock or time frames or any of this stuff, because it doesn't work for me. Because I'm defining the market by the behavior of the participants, not by, I need 5 minutes before I can even look at anything. Nope. Not for me. It's okay if it works for you. No problem. So we come back and check this. Look at the location. Here's my buyer. On the way up, I see sellers. Now, I don't have a location to do anything. I have, watch this over here. Sellers were trapped here. Notice where I come. I come here. That's support. See the behavior? This is support. This is resistance. So you have choices. You would be able, now this is advanced trading, but you'd be able to lean on this structure because that's why there's volume here, and liquidity and absorption. Now, I'm not saying it's a long, I'm just saying I'm showing you how to read it. The resistance is the opposite high volume, which is this. So you see how it's bracketed by volume? So high volume here, high volume here. So this is support, this is resistance. Okay, so support, resistance. Now you have to decide, what are you doing? You take a long here, you have to scale in front of this because that's the last place it was too high. If you take a short, you got to scale in front of this because this is the last consolidation where it was too low and the liquidity. So you can bracket this. You could be selling this, buying this, come back up to this, can't get through, scaling, and you get taken out, right? Or shorting, up to you. And by the way, if it comes down, you would be looking for this next consolidation, right? Which was here. And where does it go? Come on, follow the yellow brick road. Back to here. Back to here, where the buyers are trapped. Back to here. This is called trading in fractals. Now, this is advanced, what I'm showing you right here. But it's not really something I think anybody ought to do unless you really got your stuff together. But you learn this process in a broad stroke with the structured trades I share in the Bookmap Discord TraderLab chat. And by the way, all this is available to you at no cost. The link in bottom of YouTube will bring you to the Bookmap Discord TraderLab. There's 60 PDFs of these structured trades. Now, this stuff, this is more advanced. But how does this happen? If you understand structured trades, and it'll take you time, trust me on this, you can, in my opinion, and based on the results of other traders in TraderLab, build a business. You can become a profitable trader. Now, that doesn't mean you will, but you'll have the ability to educate yourself to understand how the market works, which is, I think, it's pretty important. And throw your indicators to the side because the indicators only apply when you understand market mechanics. Because then you would, if you knew right here was resistance, now you could be using a quote indicator for alignment. You see what I'm saying? Because I anticipate to participate. I know what this says. It isn't because I've got a stochastic that eventually rolls over somewhere. What good does that do me? And then what is my oscillator or moving average or whatever tell me about this? What, I'm supposed to get long? I don't know. I get long right there. By the time my indicator rolls, I'm getting long here. Well, this is where I'm supposed to be getting a scale. How does that work? You see what I mean? So I can't do that. Been there, done that. Don't work so good for me. How about this? This is where the sellers failed and the buyers took over. You see them? Is it reasonable if I come back there that the buyers who like this price, oh, I like this, and they come for it? If we get the thing on sale again, might we get an opportunity to buy it? Might these buyers come back in if they thought this was a good deal? Oh, it's on sale. I think it's going higher. I'm not paying that. It's going lower. Oh, but it's on sale. It's going higher. Now, right here, watch. Where does this trade fail? Under here. You following me? If I get long here, I got to look over here. Am I putting my stop here? Nope. It's under here. Or, let me give you the or I do put my stop here. I get risk neutral. I get taken out here. How about that? And what do? I'm still leaning on this. I put the trade back on. What is your trade plan? And then I'm coming back the other way. And I know this is too high. So you see what I'm saying? You see? You see it. Guys, are you seeing something of interest? Give a thumb up in YouTube, guys. It helps the stream. And don't forget to watch and it's in the YouTube chat up towards the beginning, top of it. There's a special little thing I did. It was yesterday's stream. Watch it over the weekend if you missed it. It's setups and trade management for extreme market conditions. You're going to like it. Why are you going to like it? Because if you can understand what I'm sharing here, you would be able to navigate yesterday's market and have a potentially enjoyable experience in between getting, the usual, the volatility and the randomness. This is trading like a casino, if you will. And what I'm doing is I'm only letting the participants tell me what to do, not my indicator that I don't use, because what did it used to do? Same thing it does to you. So I don't use them. Not saying you can't. But what I found with my indicators was, and when I talk about indicators, I'm talking about trading systems also. So it's like when I started trading in 1980, we didn't have computers or the internet. There was no information. And Wells Wilder and indicators were just becoming available. So that was pretty exciting. I shared an office with George Lane. He created stochastics. So if you don't think I didn't go down oscillator world and hybrids, you are mistaken. I learned market profile in mid-1980s from Peter Stottlemyre. He created that. That was over at CBOT. So I learned classical bar charting at CME and the market profile. And by the way, I want to tell you how smart I am. You think I'm smart? I took my indicators and said, I'm going to make this market profile thing better. So I took a process that didn't work, which I didn't understand at the time because I thought I just had to fix it. And I said, if I use my indicators with the market profile, man, is this going to be great? Nope. So is that you? The thing about TraderLab is I provide guidance, and my guidance is based on my experience. My experience is the same as yours because this is what we all do. The difference is you now have access to information and you have access to TraderLab. The problem, of course, is I go out on YouTube, I start looking at stuff. I don't even know what to think. I'm overwhelmed by all the BS. This stuff. We discovered this. Join our thing, subscribe. The only thing you need to do, how you took $200 and turned it into $50,000. Guys, please. Now, here's the interesting thing. Snake oil has been around as long as there's been snakes. And apparently, the snakes just have a better way to market the oil. So that's along to where? Where was it too high? Can you see the method to this? You see? Questions, guys. Now, so you guys know, in TraderLab, it's not about you doing that. It's about you learning to understand why. You don't need an indicator. What you need to do is understand how the market works. You will find your indicators. If you come to TraderLab, there's a primer webinar, and it's available. The link there's in the bottom of YouTube. You click the link. There's no cost, by the way, to participate in TraderLab, become part of a terrific community. Now, the thing about a community is, what's the point of being in a community unless you can grow and develop? What the community of the TraderLab is serious traders looking to build a career in the business. You can come to TraderLab and just ask them, what's your experience? What did you do? What did you wish you did different? Even in TraderLab. What's your experience prior to coming to TraderLab? What has changed? What are you still working on? There's traders post charts. They debate, they discuss, they share, they help each other. It is a collective of seasoned traders with all ranges of experience, from new traders, and I mean new, you could be new trader, novice, to those with over 50 years experience. I'm going on 45 years myself. Now, that is not mean that I know it all. All it means is I've had more time to waste more time going down dead ends where I thought I was getting there. You know what I mean? And where I was really getting was Trader Groundhog Day, where I was trying to fix defective processes because I didn't understand the business I was in was gaming. I thought I could, and part of it has to do with my early education. I went to CME and took classical bar charting. This is before candlesticks. This is everything. It was like get the ruler out. And basically you did it. You get a chart book every Monday morning, would have the previous week's RTH bars, open, high, low, close. And every day in the chart book, you'd put in the open with a ruler, you draw the open, high, low, close, draw your little trend line. That was how it started. And classical bar charting is measured moves. So I learned the concept of prediction. So I took that idea and I thought that is what we were supposed to do. Because I learned it at the CME, it must be okay. It actually is okay, except that's not how the market works. Well, you can't predict anything. But, so that's how I started. So I kept building everything around a concept that I accepted. I had a belief. And I believed that ultimately, if I just worked on it and put the hours in, and I mean beyond hours, it turned out to be years and years, that I would make it better. The gamblers do the same thing, you see. I didn't know this was about edge or statistics, and that we're in a random environment where anybody can do anything. A hedge fund can come in. Now it's high frequency traders. We didn't have them when I started out, and icebergs, all this stuff, didn't exist. It was the guys on the floor who used to pick your pocket. Now it's the algos. It's just a technological version of the locals, or depending how however you want to visualize it. So I was always trying to predict because I thought that's what we were supposed to do. And fact is, you can't predict anything. So if the casinos can't predict the outcome of the next hand, because the cards are random coming out of the deck and the gamblers play the cards randomly, the only thing they can do is come up with a process or a game that has an edge, and you need to define your game. This is advanced when I'm sharing it with you right here, but it's a derivative of the primer process that I share in the TraderLab. If you can learn the primer process, and the primer process is really, and this is not easy, even the basics, if you will, is more advanced. What I consider basic is not simple in the sense of getting your mind wrapped around how the market works and accepting the randomness of the outcome, just like the casinos do. Mentally and emotionally, we have a real problem accepting randomness. So we're geared to avoid pain psychologically, and we're going to try to find certainty. That's why we do the things we do that are actually self-defeating and not aligned with this business. We do them because we're driven emotionally by our wiring to avoid the saber-toothed tiger, run from the burning building, So that's our survival instinct. It's great, except not here. The way you survive here, in my opinion, is statistics and knowing that you only interact where you have an edge and understanding how the market works. How can you operate in a business that you don't understand and where you're misled by marketers that just want to sell you an idea and appeal to your sense of avoiding pain? All you need is this one thing. How I made $1 bazillion by this one crazy thing. Really? Come on. Now, if it works, tell us about it. Come to TraderLab. You see? So this is too high. Notice what you see here, the Acapulco cliff dive. Do you think you want to get long after seeing this? Or do you think if we come back, now you could get long here, you could be scalping this thing, rotational trading, and out here. You could be short here, coming back to here. And by the way, to here. This is the targeting on this, and it's not a recommendation. You can watch this. And what else do we know? Going on noon, Friday. Hey, grill. I'm going to warm my grill up real soon. Any questions, guys? Notice the icebergs were operating also. You know, very interesting stuff. This is TraderLab. And if you're interested in TraderLab, by the way, first of all, if you're finding this interesting, please give a thumb up. Very important. This way you can support the stream. Encourage Bookmap to support the stream. There's no cost. So this is something unique. You know, most chats and, you know, are subscriber based. Bookmap isn't doing that. And the only way they're going to continue allowing the stream to continue without charging for it is if you support it. That means come to TraderLab, give a thumb up. The least is give a thumb up in YouTube. Subscribe to the channel. There's a lot of other education. Now, in the TraderLab, there's 60 PDFs of structured trades you can download. Remember, right? There's 60 PDFs of structured trades you can download and reverse engineer. There's a library of webinars. Start with the primer one. It gives you a high-level overview of this process and the behavior. And the community. And there's no subscription requirement. I mean, I don't know about you, but I don't know any, quote, I'm not a vendor, you see. You know what I am? I'm a trader. And I kind of got into doing this. Bookmap asked me if I'd be willing to do it. And I had to think about it. And you know what I thought about? I thought about what I went through. And I said, you know, I trade in the morning, I trade ETH, I trade up until I stream, which is EU close, which is 10:30 my time. There's a reason is because the range typically contracts after the EU close. Now I can continue trading. These are trades I'd be taking if I wasn't sitting here visiting with you guys. Hold on a second here. So, you know, this is long, this is short. Do I want to trade? I could trade this. Do I want to trade it? I don't know. I know this is my target. I also know if I don't get below this, I can be taking longs against this because this is the last spot. Let's just look what happened. The sellers were absorbed. This is a seller trapped. I mean, I could be leaning against this volume here, but my range is compressing. So I am not a big fan. Here's the thing. Let's look at this. How do you trade this? If this is too high and this is too low, and now this is too low, and this is too high, and now this is too low, and this is too high, how do I get, oh, this is important, VPOC migration. This is saying now that more volume is sitting here than down below. So now if we push off from here, it sets this up, which is our target. So now for me, the shorts are counter trend, right? And I could do either, it doesn't matter. Or let me take you back to the other idea. Longs only because of context with target. Shorts are exits back to longs, to targets. You see? And then your stops under here, and you're scaling here. Different ways to play it, all a function of trade. And now this is very important. If we push off, this is the target. If we rotate under, then we can come back here. That's what I know. So, and these are not trade recommendations. Any final questions in TraderLab in the Bookmap Discord chat? By the way, this stream is available exclusively to Bookmap Discord TraderLab participants. It'll be available through Tuesday morning. So, and see the behavior here. This is very key because if we can't get above this, notice the liquidity, we're going to potentially come back here. Can you see that? Can you read it? How do you learn this? From the TraderLab. So what I know is if I'm long, this is my resistance. This comes up as good news. If I don't get over it, it's a rejection, and now it sets this up. So it's if this, then that. If not, then what? That. Or something, out here. That part, not so cool. Don't know. Can't predict. Where's my swing? Here. Where's my stops? Under here. Where might we go? Stops. Stops. I don't know, by the way. I can't predict, right? And then here. Now, in the profile, this is the outside edge. This is that, it's on sale. I'm not paying that. And then the retail price, which right now is here. Anyway, guys, let me show you what these look like. Thumb up before you leave, by the way. Very helpful. This is the 60 PDFs you can download. You need to click that link in the bottom of YouTube to access these. There's a library of webinars, enough there to abuse yourself for quite a while. Different configurations, some up to 4.5 hours long of real-time narration, similar to what I was doing yesterday when I was actually pointing out trades as they were developing, and some of what you saw today. And this is exactly what I'm doing. Now, the thing I'm showing in these, and I'm not a vendor, so, and there's some, why? This is from 2020. I just kind of slapped these together because traders were saying, what are you doing? So it was never intended as a course. However, you come to TraderLab, you're going to find things, I think, that are quite different than what's out there in the, quote, retail mainstream. And there's no magic. What it is strip away all the debris and get down to a basic understanding. Basic doesn't mean simple. Basic means understand how the market works. Change your thinking to what the business of trading is to what it actually is, which is gaming. Align yourself with a process that is proven, and that is casinos, how they work. And can you replicate a successful business model in the trading business? How do we do that? Same as the casinos did. Vetting setups. In other words, playing games that have a statistical edge, becoming emotionally detached as best we can from the outcome of one game, one hand, or one trade. Understanding that we extract the dollars from the gamblers in a random distribution of outcomes. We have no control over the outcome of the next trade. We do have control over what we do. That's the only place. So if you have a trade plan, it's vetted, which means it has an edge. Your job is to execute it, accept the random outcomes, and keep doing what works. You know what works because of statistics. That creates tangibility. No longer are you guided by your emotion, raw emotional state, which is the lunatic on the loose, literally, because of the chemicals released in your brain. You can now embrace statistics which are tangible. If you know you have X% probability that when this happens, that you can get risk neutral because of the stops here. And if we get under here, we know retail traders keep their stops at VWAP and mid. You would be on this trade, but you'd have to scale where these sellers got trapped, which is here. Then if we get under the swing, we accelerate to where? The next layer. Not a trade recommendation. See the behavior? So this is TraderLab. If you have the statistics, it gives you courage to manage the lunatic, and we call him Hyde, Jekyll and Hyde. Unity of like-minded traders that have come together to leverage their collective experience and build something better. Ask them what works for them, what they wish they did different. Is it changed their outcome? Many traders in the TraderLab who were, no matter what they tried previously, are now profitable traders or are on their way to becoming profitable. Other traders have moved on to prop accounts. And of course, many different things. You're all welcome to visit the lab. Please give a thumb up on your way out. Remember, this stream is available exclusively to TraderLab participants through the weekend, plus the library of webinars is also available to everyone. Thanks again for visiting TraderLab. Please give a thumb up. I appreciate you guys being here and sharing your day with me. Go down to the link in the bottom of YouTube. if you want to access the TraderLab. And again, there's no cost. So, as my mother used to say, free is good. And again, I don't know how long Bookmap will continue this. It's a non-pay situation. There's no cost, that kind of thing. So I think I would say sooner's better than later. Thanks again, guys. Please give that thumb up. It helps the stream. And I look forward to seeing you guys really soon. And don't forget, review the streams. If you're in TraderLab, you've got homework. Review this stream compared to what you did today. Take notes. Were you out of alignment? Were you able to get into alignment? Did you observe the behavior in the ETH, which was the last auction? Did that set up your anticipation of today's potential behavior? Did you identify the levels like I do with the statistics? And then do you follow the yellow brick road and follow your plan when your trade shows up? If you didn't do it, it's only a matter of time before you can get statistics to do it. If you're responding emotionally, FOMO, and impulsing, and all the crazy that comes with hide because of those chemicals, you need to get your arms around that. We all work together in the TraderLab. We're all human. We all make mistakes. Nobody is immune, but we can get better, especially if we work together. Thanks, everybody. Have a super holiday. Thanks once again to all our veterans and all those who have made sacrifices to keep us free and to allow us to be in where we are. And thanks again. And thank you, TraderLab, for everything you've given back to me. See you guys soon. Take care.